Hey, welcome to Friday's SPY T Chat, and in this video we're talking about trading over the weekend, which has been a hot topic lately. And there are a number of ways to go about it, and one way that I am looking at over this next weekend is different than normal, and I'll talk about that in a few moments. But first, let's just talk about trading over the weekend, the pros and cons of trading, especially options over the weekend. I think it's important to really be realistic about how to approach the weekend. Now, if you're going directional, I don't find there to be much of a problem. If you're just going with the percentage of your signal, if it's 75% right and it's usually right on Mondays, hey, go for it. Go for it directionally. Overall, you'll do pretty well just based on the math. However, if you're doing a SPY T trade, you might have some issues, especially if there's not a big move, which is true, of course, with options in general. And so I highly recommend that if you're doing a SPY T trade, or even a directional trade, quite honestly, maybe go out a little farther in the expiration so you don't have as much time decay. And, you know, when the market's really volatile, you can still have some of that decay by Monday, especially if the volatility is going down over the weekend. You could be right, your signal could be right, but yet you could still be even or even negative that morning, especially if there's not a big move. So we want to be considerate of that fact that time decay can really hurt your options, again, especially when you're doing a SPY T trade. So what are some other things that you can do? And that's one thing that I'm considering. And, you know, one of our members in the group, we had a good conversation, and he has been using the TQQQ and the SQQQ, which is the ETF fund, which is a leveraged fund. What is a leveraged fund? So, as you know, you can buy the QQQ, which is the Internet and Technology Stocks, or the SPY, which represents the S&P 500, or the IWM, which is the Russell 2000. And, you know, these are just straight up, you know, if it goes up, you make money. If it goes down, you lose money. But with a leveraged ETF, it's representing the QQQ, but it's 2 times or 3 times, and the TQQQ and the SQQQ are 3 times, which means, let's say the QQQ goes up 1%. Well, the TQQQ would go up 3%, which is pretty nice, which is a good way to go. And the advantage, and there is also a disadvantage, and why I wouldn't recommend it as a trade throughout the rest of the week. And I'll talk about that in a moment. But over the weekend, it's nice for the fact that you'll not have the time decay. And if, for example, let's say the signal says up on Friday, which it does this Friday, but let's say something happens over the weekend and it goes down, and it starts off down. Well, you know, you have time working against you when you buy options. But if you buy an ETF, it doesn't matter. You could wait it out. If you really think that the market really is still going to go back up, maybe it's a temporary drop and it's going to work its way back up, you're not going to lose value due to that time decay, which is a huge advantage if you're going longer term or you want to get out of the trade, where with options, you really just need to get out of the trade as soon as you can, usually within that first half hour, especially at those shorter expirations, because theta is just eating away at your profits. Now, why would you just not do that every day? Well, you can. However, the advantage of options is that when we do a SPY T trade, you know, the value, we buy a call, let's say SPY T trade, we buy a call just in the money and buy a put 1 or 2 out of the money. One thing I haven't mentioned too much with the SPY T trade, and as I've been noticing as volatility has come down and the premiums have come down, that sometimes I'm not going too out of the money. So traditionally, I've talked about the SPY TS trade as one call. Let's say we're going up, the signal says up, one call in the money, and then 2 strikes out of the money for the put, and reverse if the market said down. Well, when the volatility has been coming down, I've just been going one step out, one strike out of the money. The reason being is really what I'm looking for, because traditional SPY T option trades, we're usually doing a 2-to-1 ratio. But a SPY TS is a little more conservative. And so rather than looking for if we have a call at the money in a put for a SPY TB trade about half price, I'm looking at about 25-35% of the call premium, if that makes sense. So it's not that full 50%. And what I've noticed, though, as those premiums have been coming down with the SPY TS, 1, you buy a call in the money, and 2, out of the money for the put, has been about 40%, almost a SPY TB trade. So you might just want to go back so you're in that 25-30% range. And that's works out pretty well. But so here's the advantage, though. With let's say the market goes the other direction. Let's say we have a lot of pressure, which we do today on Friday, and to up, and the market just flips and goes down a lot. Well, we can make money going the other direction. If it's a big enough move, many of the SPY T trades will start to make money on the other end. Now, obviously, the more aggressive ones like the SPY TA, you really need a big move. But the SPY TS, if it's 0.5 or above, maybe a 0.7% to the negative, you could start making money from that point on. 1 point in the other direction, 1% in the other direction, you're starting to make money the other direction. Not as much as you would have if it would have gone your way, but it's better than a total fail. It's better than losing money, right? But here's the thing. You can't really do that with the ETFs. For example, if you did a straddle, a straddle is buying 1 call, 1 put. Well, what if you bought the ETF that's going up and the ETF that's going down, right? The short and the pro. So the TQQQ going up and the SQQQ going down. Well, they're just going to even each other out. So you don't have that advantage. They're just crossing each other out. One goes up 5%, the other one's going down 5%. So when you're doing that, you should really only just go the directional approach with it. But again, the advantage is over a long period of time or even over a holiday. We have holidays coming up, and you want to trade from the day that the market closes to maybe 3-4 days later when it opens back up. Well, use a ETF, leveraged ETF. You can actually make some money and not worry about that time decay. And that's what I think is pretty nice. And I think I'm going to incorporate that idea more and more in the conversation. Again, you can do directional, that's fine. But then the SPY TSs, when you want that protection. But if you want to do those longer trades, you can go directional without worrying about that time decay, and you won't lose a lot of money if it goes the other way. If it goes down 1%, well, then you could lose 3% of that trade. So sometimes I just like to say, hey, I'm in the game over the weekend, and this trade is the one I'm going to try. Now, one thing I noticed, and maybe it's not the case, I tried to buy it just because I was busy at the end of the trading day. I tried to buy over this weekend the TQQQ, and it was 4 after the hour and the market closed, and it was not picking it up. It was not, I couldn't get the order filled. And so I just canceled it and bought an SPY TS trade. Actually, no, a SPY TB trade, because it's high pressure, and I did it 10 days out, because I'm usually going 3 to 5 days, but I did a lot further out, so the theta isn't as bad over the weekend. And I'm hoping for a big move on Monday. So we'll see how that works out. But you have to test these things. Some of you need to just test a paper trade. And I think it's important to remember, look, I'm just like you. I happen to be a guy who created an algorithm that kind of shows me the pressure, and it tends to be right many more times than it's wrong. But I'm trading just like you. I test out option ideas. I'm testing out ideas that I share with you. But you have to decide which one of these ideas is right for you. Some are more conservative, some are more aggressive. And I'm just trying to share the ideas, the best ways we can use the information that we have. Because really, if we do this right, we really just have to be right about 55% of the time, and we're doing okay. Now, one of the things I'm doing inside the members group is I had a great study that I did a recent video on. And if you haven't seen it, check it out. I think it's just a video or two ago. And I'm going to do a continuous study from this point on for the members, where we're going to start with $1,000 and show the different trades: directional, a straddle, and then a SPY T A, B, C, D, and S. And just so this will be a longer study, and we can all watch how that is working out. This past week, the SPY signals were not awesome. We had a couple days that they were neutral, and then we're wrong on Monday, and yesterday with those retail numbers, it just shifted the whole market to a big downside. But I still did okay. Actually, I was up, despite the fact that really technically is more wrong than right this week, after last week being 100% correct. And this week was, I would call it too right, quite honestly. However, I did 17% for the week. And that's because I did the SPY T trades, because 2 of those days, although it was reverse of what I was pointing, did pretty well. One of them I did really well. So again, you just have to just think about how you're going to approach it, plan it out, and even when the signal is not always going your way, when doing the SPY T trades, you can still profit from that. Now, if we're 5 out of 5, remember the week I did, the week it was right every day, we did about 120%. I mean, so there's a big difference between 17 and 120%. But obviously we had more wrong days than right. And that's the idea too, is that when you have signals that are more right than wrong, that pushes the profit much further and much better than just flipping the coin or guessing. You're using something to give you a signal, and it doesn't have to be the SPY tomorrow signal. It can be any signal you want to use. And I have a number of videos on different signals you can try, or maybe a combination of signals. Compare those signals, like put-call ratio. What is the put-to-call ratio? What is the big money doing in the options flow? And then compare that to what the SPY pressure reading is at the end of the day. A lot of ways to go about it. You just have to find the right one for you. Yeah, I have this little spot on my head. Well, that's because, I ran into a pole. I was at a networking event, and I was looking at somebody, and I turned around and ran into the pole. Yes, see, that's who you're listening to for some ideas in the stock market. So let's be real here. We're all doing our best, and I'm trying to share with you the best information that I have. And sometimes it is so right on, it's amazing, like last week, and then this week we had enough news to flip things around that it wasn't as perfect. But that's why, again, I try to dig into these different types of trading ideas so you can protect yourself on the days that are wrong. I just had a nice call from a gentleman who's a new member. He's from Oklahoma, and he just called. He's surprised, actually, that I answered the phone, and he was just wondering, about these ideas and what's going on. He's talking about going directionally. And it's like, hey, I've done well directional, but I would definitely take a look at the studies, because when you're going directional and things are going right, like last week, man, if I was going directional last week, wow, I mean, 120% would have been chump change. Really, it just would have been nothing. But this week, going directional would have been painful, would have been very painful. And probably definitely would not. I know some people who are going directional And really, they were not, some of those days they're losing 65% of their trade the next day when going overnight. So that's what we're trying to avoid. Directional, and yes, if your signal's right most of the time, you're going to make money. But man, those rough days, and truly, you just have to learn how to position size and do it well and have a plan. You can do well directional with the SPY tomorrow signal and other signals. You can do well. I just think you can do better with a life that allows you to sleep at night, not worry about so much what's going to happen the next day. The stress level of not going directional, quite honestly, to me, is worth it. It really is worth it. And so the excitement of directional, just buying the call, just buying the put, when you make those big moves and you double and triple your, the amount, your investment, that's pretty darn exciting. But the thing is, you have to look at it this way too. You could use 1, 2, 5% and double your money. Or you could use 20% with, solid hedging and still do very, very well. And so if your 5% trade made 20%, well, do the math. 20%, that's 4 times. So, maybe your trade made 5%, sake of argument. As a SPY T trade, you only made 5%, not 20%, but you made the same amount of money. Does that make sense? It's all math. Just start doing the math, and heck, my math could have been a little bit off, but you see the point. And when you get the confidence of understanding how these SPY T trades work and how much you probably make or lose, you can increase the percentage of your portfolio. Maybe not your total portfolio, but maybe your trading portfolio. And know that, okay, I'm not going to risk more than 50% of it at a time, but I know I'm not going to lose more than, the worst case scenario that I've seen out of our limited number of data was 20%. Right, excuse me. No, 12% for the SPY TS. That was the worst of them all, and most of them were under 5%. But if you're not risking more than 50% of your portfolio, that was the worst case scenario of losing 6% of your portfolio. And that usually happens not so much because the signal went the wrong direction, but because maybe it was a flat open and the volatility was going down a lot. And maybe it was even a short expiration. Maybe it was 3, 5. This is where the worst case scenario could happen. You have expiration, 3, 4 days. Volatility comes down a lot and it's flat. It's tough to win that game with options. And so that's where those bigger losses could come into play. And they don't happen that often, but they could happen. And that's why you always have to be aware. It could happen, and so you don't want to just start investing 100%. In our tests, in our studies, we use a 100% scenario, but certainly don't recommend that in the real world. You want to position size to your comfort level, and that will help you get where you need to go. And again, one of the most important things, to let you sleep at night, and that's why I recommend trying and testing out those ETFs. And those ETFs, those leveraged ETFs can be 2 times leverage or 3 times leverage, and they can be in different sectors. Like I said, the QQQ, SPY, IWM, the semiconductor sector. There are a lot of places you can look. Just look for leveraged ETFs, and then you can just buy them like stocks and not have the downside of the decay over the weekend. And I think that's not a bad way to go, a bad way to test, or even long periods of time. If you think the market's really going to go down, that's not a bad way to do it. Just, you don't know when. You don't know when the market's going to go down, but you could buy the SQQQ and say, I'm going to hold on to this for a couple weeks because I definitely think it's going to go down a lot. You can make it a little extra money. Something to think about Always happy to chat with you on Fridays. And this topic was trading over the weekend. What topic would you like me to cover on our Friday chats? Put it in the comments below, and I'll see you in the next video.